Eric Muathe, Muathe.com. Today being March 30th, 2017. Want to take a look at this video here, or not look at the video, but just add some comments. So this video was recorded in February 2016, February 16th, 2016. And this is about the time when the market made a low. And of course, as of 2017, the market was trading at all-time high. So this was a critical time in the market. I wanted to go back and take a look at what my views at the time were. And at this time, I think I was looking at shorting the market because I'm discussing these stocks here. I'll have the link to this video in the description. So take a look at this video link. It's a short video, or maybe about 18 minutes. And then take a look at this current video that I am discussing the markets here. So again, this is just going back and I'm doing a look at the market again, now with the benefit of hindsight. Let's see what the charts were saying. And one thing I point out here now, or I see here on the daily chart for the Dow going back to February 16th, 2016. So we can see clearly here the market made a new low. And this new low came with an improvement in the RSI. That was good enough to at least anticipate a reversal. So we got that reversal 2 days up. Keep in mind the market had had a significant drop at the beginning of 2016, huge drop all the way here. And we can see that after the lows here in January, the market tried to recover but stalled when trying to move above the RSI 50 on the daily, which is these highs here. So the pullback to fresh lows here in February 2016 just made sense after this double top rejection when trying to move above that 50 level on the daily. So as of 16th February 2016, I think what I was looking at was this line here, that the market was coming back to test this RSI topside resistance possibility there. So I was leaning towards potential for resistance, maybe, maybe not. But I could also see at the time that the market would have to contend with this resistance here based on this break. This break here that brought the market off the highs of late December. There's also another line, which is this line here. This line comes from this break, which coincides with the actual high here. And if we go backwards again, the same line gave us the break of the highs here. So let me do that one more time, because these lines eventually did create a problem, I think, as far as my thinking was, because there was a break here of the high. So we knew that was an important line. The market stalled. Let me just draw it somewhere there. We stalled here off the highs there. And of course, at the time we were leaning short because of that resistance. And of course, we had a good reward of that position because the market dropped. Now the market is trying to recover as of the 16th of February. We've seen the market show positive divergence, with the RSI improving, prices making new lows. Now we are recovering. It makes sense. So I think I was leaning, okay, so we got the bounce of the positive divergence. What's next? And I was, like I said, I was looking at the potential for this being a problem, this topside resistance on the Dow. If the Dow was to stall here day to day, we would lean to a market that was going to pull back. Now I want to show you what the weekly chart was looking at that particular time, on the 16th of February of last year, 2016. And now that I look at this on hindsight, I should have given more weight to this idea that we had already come back to test this break line on the weekly time frame here. The market did bounce, so we could have used that line as a support level. So as of mid-February, the market has already tagged this line twice here, which is this lows, and again here, which is this lows. So that uniformity support should have started giving me the idea that with the support on the weekly, there is more evidence that even with day-to-day pullbacks, the weekly charts are suggesting the potential for a rebound. This is what I'm trying to learn from this experience myself, because I can see clearly here that given the weekly chart has more strength than the daily. So chances are, if this is giving us double bottom support, we need to lean more to the upside as opposed to using the day-to-day resistance levels. Also, there's something else here, which is you made a fresh weekly lows here, but the RSI is showing an improvement. So that's another layer of potential support, telling you that more than likely, week to week, things are starting to look like they want to recover after you got this direction here correct, this highs, you got this pullback correct. Now it's starting to recover. You need to start leaning towards a possibility of a move higher, because the weekly charts are showing double bottom uniformity support. Keep in mind at this particular point, we have now a 1% move in the market. Remember our 1% rule plus 1% rule. This one is on the weekly, which gives us now the confirmation that prices are starting to recover with this 1% move. You can start changing your direction or your analysis since we were bearish here. Okay. Now let's take a look at the monthly chart at this particular point, February 16th, 2016. So right now we are looking at the Dow, middle of February, and the Dow looks like here it's not yet conclusive whether it's breaking down below this RSI 50 line. Keep in mind, it found support here for these lows, and we had a recovery. It bounced back above the RSI 50 level here. After a couple months below it, it weaved itself back above that. Could it do the same thing here? We don't know as of this point. But what I'm gonna do is let's go and add one more day. So this was the 16th of February 2016. Let's take a look at this from one more day and update that chart. So on the following day, the Dow rallies another 1.5%. So for the 3 days here, consecutive days, day 1, day 2, day 3, the market came off the lows. Now keep in mind, looks like the market knew what it was doing, because by March 2017, the Dow is trading above 21,000. So with this straight up days here, looks like the market knew exactly what it was setting itself up for. Or let's put it another way, somebody knew what the market was potentially about to do. All right. But anyway, so now you can see that if we take a look at where the RSI has come, it's come back to test this line here. Now keep in mind, those of us who are watching this would see that the market now is back to a critical level. This was the break off the highs there. We are coming to test that. I can see myself saying, okay, if I was already playing the bounce, I gotta be careful here to wait for this to conclude itself. Don't want to rush and be buying here because of this resistance. And if that resistance is not strong support or strong resistance, this line here is going to be a problem, because this is the line that goes back to the break as we drew before. This was the break line of the highs, resistance here of the highs here. We know if we get to that second blue line, the higher blue line, the market might stall. Let's take a look at the weekly chart at this particular point in time. So this is February 17th, 2016. We continue seeing good action on the weekly RSI right there. Now we are up more than 3% for the week, which is well above our 1% rule, where we should always pay attention when we see a market come off the lows and we have a confirmed move, either 1% on a closing basis on a daily chart, or if the weekly charts are showing at least a 1% move, we need to be careful because markets could be poised to turn. So here we see evidence of a good move. If we take a look at what the monthly charts look like at the time, we can see that the Dow is stabilizing here. All right, so throughout the entire month of February, it spent the month negative, but as of right now, as of end of February 17th, it is almost unchanged. It's come back after spending most of the month here. It is now down only 13 points or unchanged for the month. So we can see evidence that if the Dow was just to turn positive, then this starts being potential for a uniform activity formation by the Dow. All right. So now fast forward. So what I've done here, I've gone all the way to the current chart as of March 30th, and where we were looking at was here, and now we can see that this held with uniform activity. This is the weekly chart. All right, it looks so easy now in hindsight, doesn't it? If we take a look at this, take a look at the monthly chart. So the monthly chart finally turned positive for the month. By the end of February, the market was positive, and the following month, this month here, it reclaimed the level back above RSI 50. Clearly, it is similar to this bounce. It is clear that this was uniform activity below 50, back above it for this bounce here. So what I see here on hindsight for my own learning experience here also is that anytime I see the market show uniform activity bounce on the major time frames of the monthly and also on the weekly, I should pay attention and make sure that we are playing the market in the direction of what the monthly charts are suggesting and what the weekly charts are suggesting. So this is one thing why I like to do. I like to go back and take a look at my previous analysis, because I have the advantage that I record videos every week, that I can go back and take a look at what my mind frame was, and I learn a lot from my own personal experience. If we take a look at the daily chart for the Dow, now this looks like it's very confusing because it's squeezed in there. What I'm going to do is I'm going to get closer view of the daily chart. Now this is almost 3-4 years we are talking about this time period here. So let me zoom in slightly. And so this is a 1.5 year daily chart for the Dow, and of course we were watching this level here. Now if you recall, I was anticipating that this could be potential for resistance, and yes, let me take that off. Yes, the market did have a couple days sideways here, but remember, we've seen that at this particular point towards the end of March, the Dow looks like the monthly for the Dow looks strong, the weekly chart looks strong, so we should pay less attention to the daily. We're not necessarily ignore the daily, but put less weight to it, because the strength of the monthly and the strength of the weekly suggests that any problems with the daily chart are going to be corrected by the strength of the bigger time frames. So we see here a little bit of a sideways action. The market is unable to move above this line initially for a couple of days there, and then there is the second line here, but finally we clear those two lines here at the beginning of March, which is this level, and since then the market hasn't looked back in terms of price. Since this breakout, we are pretty much trading well above these levels. Okay, so I want to show you something else. If I draw a line here, now I'm drawing this line here for a reason, because keep in mind, this was the line going back here. This was the break line as of the highs of November, of the highs here. We stalled and failed to move above that level for the highs here. So this line was a problem before the market dropped here. Okay, so what I'm going to show you is this line actually has been relevant. We move above that line finally, which is this entry here. We find support on this line here. which is this lows. We break below, so let me change colors here. Break below the line here, which is this movement lower. We stall with uniform activity here, which is the highs there. We stall again here, which is the highs there. We move above that line here. The market goes higher to new highs. We drop back below the line. Oh, all right, hold on. Just trying to make sure I have some color coordination. All right, so you drop below the line here, which is this highs. And finally, again, back below the line, which is this movement here. We go above the line here, which is this entry. And here is uniform activity support below the line, back above it, below the line, back above it, okay? And then back above the line for this re-entry. And recently we broke below the line. I was going to have a red color there. Bear with me. So this sell point here, this red line, or the red arrow, corresponds with this break. So the same line that was a problem as of November 2015 has been relevant throughout the entire process, from here to here and all the way up. Same line. So the one thing that I'm learning from this experience myself also is be very careful not to go against weekly and monthly charts. That's the key. In the current market, we are seeing that the Dow has come back to find support on this line. This is the daily. And also, if you take the lows here, which was successful lows, remember these lows were successful because we had positive divergence. Lower prices, improved technicals. So that level on the RSI, we can draw a line from there. And you can see this market's been using this line for every bounce since then. All these lows have come on this line, and recently here the market found support. So that's of course that's the daily, showing that the daily chart has found support. Let's take a look at the weekly, current weekly, same time frame. We can see the weekly for the Dow is doing its best to recapture RSI 69.1 level. So if the Dow stays above 69.1, and we have to give weight to the weekly chart, as long as the Dow is above 69.1, this market has an opportunity of moving substantially higher. Right? It's what we are learning from this review of the video from last year. And also, as long as the Dow continues holding its monthly RSI above 69.1, given that we don't want to go against the monthly chart, we don't want to go against the weekly chart. And both of them are still showing that the market is above 69.1. So we have to be very careful in trying to short stocks until some of these things resolve. And again, this is irrespective of what the daily chart is saying. Right? Now, if the Dow weekly stays below 69.1, then maybe now we can give more evidence to any type of short-term sell signal. But we don't want to go against the monthly, and we don't want to go against the weekly chart. So irrespective of what the daily chart is saying, for example, if you draw a line connecting the previous highs here, this was a nice breakout. On the daily, we can extend that line, something like that. Market has bounced on this line for a nice re-entry. On the daily, market has bounced on this line on the daily for a nice re-entry. And now we are trying our best to hold above this line. So we know that if the market stays above that blue line on the daily, then this market is on fire, should be bullish. At the same time, we know that if the market stalls and is unable on the daily for now, let's say if the market cannot move above that line and we stall here day to day, the Dow is above 50. If it drops below 50, has a big down day. If this is confirmed as short-term resistance, we can, just be a little bit patient, wait for this to resolve. But even though the daily can give us bearish signal, we cannot take full advantage of it until the monthly agrees with it and until the weekly agrees with our trend analysis. So if the monthly and the weekly tell us one thing, we should not try and play the other direction. In other words, we should give the most emphasis on our monthly chart analysis and also on our weekly chart analysis. As we've seen from this video, had we used the weekly and the monthly in middle of March 2016, we would have had a chance of being part of this amazing move to all-time highs. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.